The US housing market is still in a massive bubble, but as the Fed continues to hike interest rates and home sales continue to decline, a lot of experts are predicting home prices to drop in 2023. With many other sectors of the economy starting to decline, real estate is usually the last one in the line to really feel the effects of what the Fed is doing and feel the true impact of a recession. Jerome Powell, the chair of the Federal Reserve, has been trying to destroy inflation and bring it back down to 2%, and he's looking forward to housing prices decreasing in order to show that the economy is stabilizing. Now, different companies are already feeling this effect of the recession, and they are laying off their workers, and I believe that this will have an impact on home prices. Now, there are a select few experts that believe that home prices will not drop, that is going to remain steady in 2023. I would like to know from you all if you think housing prices will decrease next year. Be sure to like this video, subscribe to this channel for some content around real estate, personal finance, and the economy as a whole. Home sales fell for the 9th straight month in October as living costs and mortgage rate increases. The Fed increasing the interest rate has an effect on the amount of homes being sold because there are not as much people applying for loans because they can't qualify because of higher interest rates. Whereas before, earlier this year or even last year, maybe they could have gotten a loan at 3% for a certain amount. But now that the interest rate is around 7%, they no longer qualify, and a lot of home buyers are backing out of contract. So yeah, the quantity of homes being sold is feeling the effects of interest rate hikes, but how about home prices? Well, home prices are still relatively high, and in the month of October, it showed a 6.6 increase year over year for the median price of an existing home sold. Now, chief economist for the NAR, Lawrence Yun, stated that inventory levels are still tight, which is why some homes for sales are still receiving multiple offers. So yes, there's still demand for housing and supply is not yet at the level at which the demand for housing is warranted. But currently at the moment, we are seeing a slight decrease in home prices month over the past 4 to 5 months. Another thing to consider is that what the Fed is doing today, for example, in the month of December to increase interest rate, that may not have an effect on home prices till 6 or 9 months down the road. And so that's why a lot of experts believe home prices will drop in 2023. Jeremy Siegel, Wharton professor of finance, states that I expect housing prices fall 10 to 15%, and the housing prices are accelerating on the downside. He believes that this will be the second biggest price decline since World War II. Now, 10 to 15% is a decent decline, but I believe we have way more to go, way more of a decline needed in order to really bring down inflation. Now, some other experts believe, yes, we will have a bigger decrease in home prices. Ian Shepardson, chief economist at Pantheon Macroeconomics, states that we expect a drop of 15 to 20% over the next year in order to restore the pre-COVID price to income ratio. Taking the price to income ratio into account, essentially meaning income levels rising over these past couple of years, also taking into account a decrease in 20% in home prices, that will bring us back to normal levels of appreciation in the housing market. Now, Mark Zandi of Moody Analytics believes that we're going to have around 20% also in home price declines. Now, I know that there are different factors that you have to consider when looking at how much of a decrease or decline that we need in order to bring us back to normal levels, like the price to income ratio that was stated by Ian Shepardson. But for example, over the past couple of years, over these pandemic years, home values in a lot of areas grew over 50%. And so even if we have a decline of 15 to 20%, will that really bring us back to normal levels? So for example, let's say you bought a property today for $100,000. Your your interest rate would be around 7%. And I went on Google and I just used their basic mortgage calculator, not taking into account other fees and other insurances and whatnot. That mortgage payment would be $665. Now, you take that same loan amount and you bring the interest rate down to 3.5%. That monthly payment is 449%. In order for us to match that 449 payment, the price will have to go down around 30% in order to reach pre-pandemic levels or at a normal rate of appreciation. So yes, 20% is decent, but I truly believe we probably need closer to 30% to bring us back to normal levels. Now, there is more indication that home prices will decline if we look at what's happening in the labor market. Major companies are laying off their workers because major companies, just like us, are fearing a recession, and so they're preparing for that. They also have to take into account the increase in interest expenses that they have to deal with and declines in revenues because people are not buying as much. Layoffs happening in the labor market causes a home buyer to lose confidence in the real estate market and leads to smaller down payments. If you don't have a job, most likely you won't qualify for a mortgage. And then on top of that, people are seeing on the news that, hey, we have a recession coming. And so they have fear in their mind. And so they're more hesitant to buy a home. Inflation is also affecting a worker because they have to pay higher costs, higher prices in things like food, gas, and their utilities. So why would they put money towards a down payment on a house when they need to take care of these other basic necessities? Even if they have a job, they're seeing their colleagues and their coworkers being laid off. And so they're more protective of their cash, right? They're not going to put money towards a down payment because they may be next on the chopping block for being laid off from their job. And so they're trying to increase the amount of savings they have and just make sure they're safe during the downturn. Another reason why the labor market affects the housing market, especially in this scenario, is because during the pandemic, a lot of people were sent to work remotely. And so with that, they were looking for properties to foster that type of work. And so they're looking for bigger and larger houses, which are usually more expensive, right? And so they're finding houses with a second room that they can work in, with a larger backyard. But now that a lot of companies are calling their workers back into the office, those houses are not needed, right? These larger houses. And so in that way, home values will decrease because you don't have as much people trying to find this house because they're now working at the office instead of working at home. Now, with home prices decreasing and the Fed hiking interest rates in order to increase the rate at which inflation goes down even more, we run the risk of getting deeper into a recession and possibly hitting a depression, because with the abrupt hikes in interest rates, that is going to really have a huge ripple effect on home prices when they start to fall. Because the faster you hike the interest rate, the faster house prices will drop in due time, 6 or 9 months down the road. And so you don't want to do it so much where we kill the economy, but you don't want to do it too little where it has no effects. And so you just have to balance that. Well, the Fed has to balance that, and that's pretty difficult. Now, I do personally see home prices declining in 2023. I bought a property in 2022 this year in the summer, but I actually bought it lower than asking, and I made sure I ran my numbers and bought a safe investment property that actually makes me money. And so I'm actually looking forward to home prices going down so I can look for the next property to invest in. And I hope you are too. Use this as an opportunity not to be fearful and just to hoard your cash. Yes, be protective, make sure you're safe and you have an emergency fund, but don't keep your money in the bank. Use your money to buy these assets at new prices, at discounted prices, stocks, real estate. And so make sure you look at the different opportunities out there, especially coming into this new year. All right, you all, be sure to like this video, comment down below your thoughts on home prices declining, and be sure to subscribe to this channel. I'm trying to grow this channel and get new viewers, so please be sure to subscribe.